is the finding. Okay. See this now. Yesterday's call side 9:15. Okay. Just calculate high plus low plus close. So 351.9.
208.58.
128.85 plus 145 divided by 3. 208.58. Right?
Yes.
208.58. Let's take it in blue. 208.58. That is the first. Now let's see second. So 194.8 plus 120.1 plus 136 divided by 3. 150.3. Correct? Yes?
Yes, sir.
Yes, sir. Yes, sir.
150.3. Okay. Now let's see this and this one. Yesterday's first and so 273.70 plus 46.8 plus 239.4 divided by 3. 186.63.
Correct.
And second one will be 311.65 plus 176.85 plus 250.25 divided by 3 is 246.25. Okay. 246.25. Okay. Blue lines, you just remember we should come on 5-minute chart. Okay. Now you see this was the lower line. I will change the time so that you could see the upper one. Now you see the upper one is 208. See over here 208, 150, 246, and 186. So you just see neither of them have gone above the upper pivot. Both of them, they are trading below what? They are trading below which pivot? Upper or lower?
Lower pivot.
So what is the implication?
Premium decay.
Premium decay on both the sides.
Even the put side closed above the high, but it's not closed above the pivot.
Not high. Yeah, exactly. It has closed. Now you remember swapping lines. It has closed above the high, but it is still below both the pivots.
Below the pivots.
It has to be cross above both. One has to cross above both. Second one has to cross below both.
So no trade until it crosses to 46.
Yes, until it crosses to 46. Okay. Now, if this is so, yesterday kya tha? Let's see yesterday kya tha. Right question or not? Yesterday there was a big rally.
Right.
Then can we see yesterday? Okay, we can see yesterday. So let's go on a daily chart. See, this is how one has to understand the trading. Okay. See now. This was a big rally yesterday, right? Okay. So yesterday, let's go on 5-minute chart. So this was the beginning of first 5-minute, 6th January. What is the close? 24.0.
24.034.
24.034. So what is the nearest strike price?
2050 circle strike 2050.
24.050.
050 for call and put. Okay.
Yes.
So we are watching for 6th. We will calculate the pivot on 5th. Okay. So let's set the chart 24.050 for 6th January, and let's find out the pivot of half day on 5th January. So 24.050. This is most difficult part of the session. My style is different. I start with the hardest part and then I end with the simplest part. It is not the other way around. I don't start with the simplest part. No, I start with the hardest part because you're fresh, you're keen to learn. So that is why the hardest part. And you know, if the hardest you could digest it, then there is nothing in the simplest. Okay.
Correct.
So, yeah. So 24.050 call, 24.050 put. Okay. So now let's see on 195-minute, both on 5th.
Okay. So we don't need to do matching in this common points.
Common points. See, this is on a macro level we have just watched. Okay. Macro level pe pehle dekh lena. So this is 6th first half, second half. So we shall calculate this and this. Okay. So the first 5th, 3rd January, 4th, 5th we are weekends. So let's find out the pivot. 258.65 plus 138.4 plus 152.45 divided by 3. 183.16. 183.16. 183.16. Second, 187.4 plus 123.25 plus 124.65 divided by 3. You can make a Excel for this. If someone is expert in Excel, just share it. Some 4 tables so you can see 2 on one, 2 on the other. Okay. Someone share it in the group, whereby you will need to just put in high, low, and close, and you will get the ready-made pivots. Okay. So it is 145.1. Correct? Ayana?
Right.
145.1. Okay.
Sir, one doubt, sir, please.
Later. Not now. 9:15 and 12:30. So this is 3rd January 9:15. 199.75 plus 112.5 plus 159.15 divided by 3. 157.13. And the second one, 197 plus 120.35 plus 190.25 divided by 3 is 169.2. Now let's come on sixth. Sorry. Okay, sixth. What do you see? What do you see?
Support.
Equal and opposite.
Yeah.
See the beauty. See this close. Low 151.35. Low was 157. 5 minutes never closed there. It came up 173. See, this is only when option buyers make tons of money. When to trade, when not to trade is important. One is above, second one is below. They are both above the pivot. Now let's see whether you find a common point. Okay. Now first candle, do you find a common point? Just see what is low of put
158.20.
and what is high of call.
144.70.
Can you find a common point?
No common point.
No
sir.
common point. Let's go to the second candle. 920. Do you find a common point?
Yes, sir.
Yes.
Yes, sir.
See, 139 not common, 156 common,
Yes, sir.
124 not common, 151.6 common.
3 plus 1. Yes, sir.
2 from put side, 165 not common, 180 not common, 148 common, 152 common. Right. Let's swap also in black line. So first high and low of call will come on put 156.1, 156.1. Okay. So this is 156.1 high of call is come on put. Now low of call 124.8. Okay. So now you see this is all above 4 lines. Okay. This is all above 4 lines. Now let's see this. Okay. Now second candle. High and low put will go on call 180.65.
148.
and 148. See, one is always below the 4, second one is always below above the 4. Correct. See, this is immediately you know what is the day for option bias, what is not the day for option bias.
Sir, can we apply same system when we have two different strike price on first candle?
Yes, of course.
Okay. Thank
Keywords have got nothing to do with strike. Keywords are individual.
सर अगर वन स्ट्राइक में 4 मैच हुआ है दूसरा स्ट्राइक में एक भी मैच नहीं हुआ है तो कैन वी स्वैप
If it is an engulfing candle, see what happens. Engulfing means high and low of call or put are greater than high and low of the other side. Then you can match.
Mhm.
Got it?
Yes, sir.
That's it. Simple. So this is what is option. Now remember, option buyers. Why option buying is risky? Okay. Just now remember two things. Suppose, okay. Let's come today. Nifty. This was the range. Okay. This was the range. Okay. Now after crossing 23,790, if I feel market is going to go up, what will I do? What will I buy? Call or put?
Call.
Call. Suppose you buy call, and if price goes up like this, what will happen? You will make profit.
Yes, sir.
Yes. Situation 1, you buy call, price goes up, so you make profit. Situation 2, it doesn't go up, it neither goes up nor down, it just lingers here and here, just like that of today.
Correct.
What will happen? Premium will decay.
Decay.
You will make a loss.
Yes.
Third situation, contrary to what you believe, price straight away came down and
Down.
broke below. Then also you will be at loss.
Loss.
So out of 3, option buyer has got only one
One.
possibility.
One.
So the possibility is only 33.33%. Now think from other point of view. Suppose you're option seller, and if you sell call over here, and if the call goes up, what will happen?
Loss.
Loss. If price remains as it is, and then the premium comes down, what will happen?
Profit.
Profit. Because it was sold upper, you're buying at lower. And if price falls down, then what happened?
Profit.
Profit. So option writer has got 2 out of 3 possibilities in his way. Same thing over here. Suppose after price breaks below, you think it is going down, you bought a put, price went down, what shall happen?
Profit.
Profit. If you buy a put, price slightly goes up, lingers, goes nowhere, premium comes down, what will happen?
Loss.
Loss. Contrary to your view, this just like this one candle, second candle price goes up.